Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, I'm going to be answering the question, can my MYGA renew into a lower rate? The answer is yeah, absolutely. And it likely will do that. Reason being is once you get past the term, the insurance company isn't really obligated to give you a similar or better interest rate. I think a lot of it has to do with what interest rate environment is occurring when the term renews. Right now, we're at a very high interest rate environment. The likelihood of the renewal rate being the same or better after your term's up is extremely low. It's likely to be at, if I had to guess, I would say it'd be half of whatever interest rate that you're, maybe not half, maybe 70%. Oh, okay. So right now you can get between 5 and 6.3% for an interest rate, May 2026. Okay. Prior to interest rates going up, it was like 3 to 4.5%. So I would say, if I had to put money on it, I would recommend that it would renew at 4%. Okay. Depending on the length of the contract. Every MYGA has what's called a minimum renewal rate. So if a minimal renewal rate is 1%, and your term's up, the minimum they can renew that interest rate for your contract is 1%. So if you're going from 5.5% down to 1%, the insurance company can do that. And they don't necessarily will go to the very lowest. That's just kind of like Great Depression, worst case scenario situation. But it's likely to renew it if it's given you 5.5% for 5 years, it's likely to renew at 4% for another 5 years. And then if you want to get out of that contract, you usually have a 30-day window to transfer it to another MYGA and renew a new term, or cash it in or annuitize it. But my advice to you is, if you're watching this in 2026, or if we're in a high interest rate environment like we are now, go longer term. You think you're being clever by getting a 2 to 3 year term, but you're going to get burned, especially if you're using interest income to supplement your retirement income. Go as long as possible and get 10% annual withdrawals from it. You can get up to 10 years, and I think it's paying anywhere between, 5.5%. Get that for 10 years. Take the 10% penalty free withdrawals, use that as your income. And then after 10 years, know that you're probably going to be in a lower interest rate environment, and then you can make a decision then. If you're using MYGAs for interest income, I highly encourage you to at least look at a lifetime income annuity product where you don't have to give up control of your money, because the payouts are so high. Right now, you're getting the highest payouts, the highest interest rates since the 1990s with annuities. 25, 30 years, it hasn't been this high. So take advantage of it. So if you're using a MYGA for your retirement income, I don't mean to sound rude, but you're doing it wrong. And you're setting yourself up for failure in the future, because things increase in cost, right? The purchasing power of a dollar, good or bad inflation rate, is going to increase. And so 10 years from now, you're going to get an interest rate paying you 5.5%. You think this is cool for the next 10 years, but in 10 years, you could be in your 70s, you could be in your 80s. And the dollar, 10 plus years from now, it could be $2 or $3 is the value of $1 today, right? So the cost of things could double or triple, and then you're screwed. So you might as well go look for a guaranteed lifetime withdrawal benefit that will pay you either a high fixed income or a high increasing income that will help you keep up with inflation. If you're not doing this, or if you're closed-minded to this, I just hope that you have enough assets aside from the MYGA to help maintain with inflation. Otherwise, you are going to end up in a bad financial place in 10 plus years. So rant over. You got a comment, leave it, like, subscribe. We'll catch you on the next video.